Welcome to Money Talks, the ultimate financial news upload, where knowledge meets in Parliament join the money getter duo, CC and Cecil B, as we unravel the mysteries of finance Monday through Friday at 8 p.m. From the latest in fintech, cryptocurrencies, real estate, electric vehicles, IPOs, and Wall Street, to the rise of robotics and AI, we cover it all. So tune in as we share in the spotlight on how Black entertainers and creators alike are shaping finance and tackling IPOs, giving you the information you need to thrive in today's economy. This is Money Talks. Good evening. It is Wednesday, December 4th, and you're watching Money Talks. I'm your host, Cecil B. Money Getter. And first up, an investment bulletin news. Small dollars, smart moves. Warren Buffett's 6 power plays for building wealth on a budget. If you're looking for inspiration when it comes to investing principles, you will be hard-pressed to find a better blueprint than Warren Buffett's strategy. The Oracle of Omaha has sage advice for everything from buying stocks and index funds to managing cash flow and investing in companies. However, if you want to know how to invest like Buffett, you should first look at what he does with small amounts of money. Your long-term investment strategy doesn't have to revolve around one financial windfall. It can be a series of smart tactics with tiny sums. Here are 6 ways Warren Buffett would advise you to invest small to gain big. Start investing early. Buffett, CEO of Berkshire Hathaway, emphasizes the importance of starting to invest as early as possible. The power of compounded interest is significant, and the earlier you start, the more money you can grow. Buffett likens it to rolling a snowball down a hill. The longer the hill, the bigger the snowball gets. No matter your risk tolerance, the margins for safety on smaller investments are wider and can help you weather any financial storm you may cross. As he once said, the trick is to have a very long hill, which means either starting very young or living to be very old. Discount dive in the stock market. When investing, Buffett knows how to scout for the best deals and recommends looking for businesses that are selling at a discount. This means finding companies that are undervalued by the market, perhaps strong fundamentals and growth potential. Focus on smaller companies. Before investing in top stocks like Bank of America or Coca-Cola, Buffett has mentioned that his best period as an investor was when he was just starting out with small sums of money. This is because he could take more risks and invest in smaller companies with higher growth potential. Next, don't worry about short-term fluctuations. Buffett advises against worrying about short-term fluctuations in stock prices or the ups and downs of the S&P 500 index funds. Instead, focus on the long-term potential of your investments. If you've invested in a good company at a good price, short-term market movements shouldn't concern you. He famously said, if you're going to do dumb things because your stock goes down, then you shouldn't own stock at all. Next, be prepared to work hard. Investing, even with small sums of money, requires effort and research. Buffett warns that investing should never be easy and that you need to be willing to do the work to find great investment opportunities in order to grow your wealth or build a successful company. Next, diversity, but not too much. While diversification is important to manage risk, Buffett believes in focusing on a few great opportunities. He has said diversification is a protection against ignorance. It makes very little sense for those who know what they are doing. So, it's not that you shouldn't diversify, but you shouldn't be intentional when you do. You don't want to put all your nest eggs in one basket, but you also don't want to spread your wealth too thin. As Buffett himself has shown, it's not about how much you start with, but how wisely you invest it. Get in the comments and let me know what you think and how you feel. And next up in Tech Talk, China's power play. How chip sanctions and mineral export limits are turning up the heat on U.S. relations. China responded swiftly on Tuesday to new U.S. restrictions on semiconductor technology exports by imposing tighter controls on critical minerals used in chip manufacturing. The move targets gallium, germanium, and antimony, essential minerals for advanced electronics and defense applications. The Wall Street Journal reports. A day after the U.S. blacklisted 140 Chinese entities and restricted exports of memory chips vital to artificial intelligence, Beijing retaliated with exports bans and reviews for U.S.-bound shipments of these minerals. The Chinese Ministry of Commerce justified the measures as necessary for national security. China also cautioned its businesses against purchasing American chips due to reliability and safety concerns. The restricted minerals are critical to the U.S. economy and defense supply chains, with Beijing accounting for a significant portion of imports between 2019 and 2022. For instance, the U.S. relied on China for 80% of its antimony needs during this period. The new U.S. export controls, which took effect Monday, primarily target Chinese firms such as Neura Technology Group, Huawei Inc. companies, and equipment manufacturers. These measures also extend restrictions to non-U.S. chip suppliers reliant on American technologies, sparking concern among global taxpayers like Taiwan Semiconductor Manufacturing. The clash underscores the fragility of global supply chains and the geopolitical stakes tied to semiconductor dominance. With China tightening its grip on the critical materials, the U.S. faces mounting pressure to diversify its supply sources. The experts warn these developments could reshape the global semiconductor landscape as companies and governments navigate new trade barriers. U.S. firms such as NVIDIA Corp., Lam Research Corp., LRCX, and KLA Corp. may feel the ripple effects alongside international players. Exempt from these restrictions include Dutch firm ASM International. XSD could feel the effects of these trade restrictions given their exposure to impacted companies. Get in the comments and let me know what you think and how you feel. And electric vehicle news. Electrifying progress. EVgo and GM celebrate 2,000 fast charging stalls, revving up EV access from coast to coast. EVgo Inc. and General Motors Company celebrate a significant milestone. The two companies have surpassed 2,000 public fast charging stalls as part of their ongoing metropolitan charging collaboration. Today, EVgo and General Motors have installed fast charging stations at over 390 locations across 45 metropolitan markets in 32 states, aiming to expand access to public charging and convenient amenity-rich locations such as grocery stores, retail centers, and city hubs. The partnership, which serves renters and those unable to charge at home or work, is on track to reach 2,850 fast charging stalls nationwide. The 2,000th charging star was part of a newly opened station in Marietta, California, featuring 5 350 kilowatt chargers capable of serving up to 10 vehicles simultaneously. The site, funded by the California Energy Commission's FAST program, offers drivers easy access to nearby retail and dining amenities. EVgo President Dennis Kitch highlighted that the collaboration has expanded charging access in over 30 states, while General Motors Vice President Wade Sheffer emphasized their shared commitment to enhancing the EV charging experience for drivers across the country. Price action. EVgo shares are trading lower by 3.13% to $6.19 at last check. Get in the comments, let me know what you think and how you feel.
734 Listening Library YouTube channel for self-help shorts and audiobooks. Follow us on Instagram at 734 Miscellaneous LLC to continue our journey of growth and success together. I'll see you at the top. Holla.